Welcome back. Well, we've got plenty of stock to discuss, and let's get straight to some fundamental analysis. And to do that, we're joined by Prakash Diwan, who's joining to help us out. Hi, Prakash. Good morning. Happy Diwali to you, and hope you had a good one yesterday, and maybe it's going to be a better one today. But let's talk about a couple of stocks then. And I want to start with my favorite, not from the stock market perspective, but I'm a user, right? Eicher Motors. The numbers look very, very good. And they're talking about a new launch, which I'm waiting by for that launch because the pricing is going to be very, very crucial. 450cc, the bike is looking very good. Pricing is going to be crucial. But your view on the stock from year on, just a couple of months ago, everyone was fretting about new bikes coming in there. But it seems the thump wants to thump ahead.
No, absolutely, Nigel. Thanks so much for the best wishes of the season. And it's good to see an all-boys team hold fort today. The simple thing with Eicher that's happening now is that they've kind of figured out the perfect price points to be at. Okay, look at how they've managed to launch even a low-priced bike as compared to their mainstream product line and still do so well on that. So if they were to launch another bike that also kind of fills in some of the gaps that have been created because they've not been so aggressive in launching as much as some of the foreign collaborated businesses have, whether it's Bajaj or Hero, you will start seeing that the after-sales service and distribution network is kind of far more robust. And that's exactly why people still end up wanting to go for an Eicher product rather than any of the other ones. So I think it's more to do with the right spots that they've picked up, and the margin improvement of 2% is clearly an indication that they've managed a lot of efficiency in the entire value chain. So I think if the launch is priced well and it fills in some of the gaps that I was talking about, you will see them being able to greatly improve their volumes also. So that's where it will kind of start getting operating leverage to kick in, which has already happened in the last couple of quarters. We've seen the beginning of that trend. That will probably get deep-sided. So I think 1,000 crores of a run rate on PAT is very, very commendable, and that also justifies the premium valuation they would get vis-a-vis, let's say, a Bajaj or something. So quite positive on that, and then we'll look forward to the launch as well.
Okay, looking forward to the launch. The only thing I'll do is probably when Nigel gets his 450cc bike, I'll probably ask him to ride me around, and that's all the bike.
Better hold on tight.
Well, we'll see how that goes about. But let's talk about the media space itself. We also had Sun TV's numbers come in, 27% jump in the revenue, of course, aided partly by Jailer. How do you view this stock now? 50% of the market cap is either in cash or the value in IPL. No word on IPL value unlocking yet. And then you have the Zee-Sony impending merger. How do you view this space, and what would you bet on?
So, Magnum, interesting that while the Zee-Sony merger is kind of made the other part of the large competition blink, they've managed to at least be able to get this thing. There's been not great ad revenue growth as I can see. I think that's because of a basic slowdown in the ability to push prices higher. And most of the slots which would have actually got them better realizations, better accrual, will probably be in the current quarter, right? So, thanks to all the matches that you are seeing. But the IPL and that 4,800 crores cash valuation that they always have been sitting on is what gives you that comfort. So if they are able to do a bit better on subscription and, the overall industry revenues grow, I think they'll probably start doing well. And you've seen that in some of the other plays like Network 18 and all, where you've seen some sort of a comeback in demand. Now, ad space competes with a lot of the other, all of these channels will actually compete with a lot of the OTT play as well. And fortunately, that's no more a drag for them. The investments that they were making were actually not yielding so much because the cycle is fair longer, and they were probably late in that game. So I think it's going to be a fairly strong performance going forward. They've learned from the mistakes of the past, unless they do something which is a misallocation of capital, and that the street has always been worried about that. So if that happens, then it's different. But I think the stock also has done so well in anticipation of what's happened. But these numbers could continue, is my sense. And then you probably see, if you buy it closer to 600 instead of the current market price, you'll probably have a better risk reward than what it stands today.